Operating segment. Under MFRS 8, an operating segment is a component of an entity that engages in business activities, generate revenue, and incurs expenses. Other words, it is an accounting standard that governs how entities report financial information based on their business segments. The operating result regularly reviewed by Chief Operating Decision Maker. In summary, MFRS 8 adopts management approach, which is segments are reported based on how internal management views and evaluate the business. The objective is to assist users in understanding the performance of each component of the entity. The primary focus of MFRS 8 is to enhance transparency and relevance of financial information. Next, I will continue about what is CODM and who is CODM. CODM is stand for Chief Operating Decision Maker, which is it has a function and have the responsibilities. It could be an individual or a group of individuals. Their responsible is making key operating decisions, evaluating the performance of operating segments, and allocating resources across the entity. Who can be the CODM? The CODM is not limited to the CEO. It can be COO, a senior leadership group, or even the board of directors. It depends on who actually review internal performance report and direct to company scale strategic position. Here I state two examples of CODM in two different companies. In Sunway Berhad, we have Tan Sri Datuk Sri Dr. Jeffrey Chia. He is a founder and chairman of Sunway Group and also a chancellor of Sunway University. Second example in Sime Darby Berhad is Datuk Jeffrey Salim Davidson. He is an executive deputy chairman, non-independent executive director. As we all know, their responsibilities as CODM in their company is setting overall strategy and direction and allocating resources across segments. They also review the performance of each business and ensure they meet targets. As CODM in Sunway Berhad, Tan Sri Datuk Sri Jeffrey has provided visionary leadership and determines the long-term strategy of the group across its many divisions such as property, construction, healthcare, and education. Meanwhile, in Darby Berhad, Dr. Jeffrey Salim responsible for major decisions affecting day-to-day operations at group level.
When talking about reportable segment, there are two types. The first one is a business segment. Business segment is a distinguishable component of an entity that is engaged in providing an individual product or service or a group of related product or services, and that is subject to risk and return that are different from those of other business segments. The second one is a geographical segment. It is a distinguishable component of an entity that is engaged in providing an individual product or service within a particular economic environment, and that is subject to risk and return that are different from those of other economic environment. Under MFRS 8, an operating segment is reportable if its revenue is 10% or more of the combined revenue of all operating segments. Our group chose Darby Berhad. Let's refer to the official notes 46 subsection A, segment result from Darby Berhad annual report. As we can see here, the group has presented its financial performance for 2025, categorized into various segments like industrial, motor, and the newly acquired UMW. The most important figure to note here is the total segment revenue, which amount to RM70,061 million. This figure will be our benchmark for the mandatory 10% threshold that's required by MFRS 8. Now, using the data from the annual report, I have prepared this summary table to determine which segment qualify as reportable. Based on our threshold of RM7,006.1 million, which is 10% of the total, industrial for 27.1% of the revenue, motor contribute 49.2%, and UMW make up 23.6%. As indicated in the reportable segment column, all three major divisions passed the test with a yes status. This proves that Darby Berhad disclosure is accurate and follow the quantitative criteria of MFRS 8 perfectly. Next, for the geographical segment disclosure, Darby operate across 4 main regions. First, Malaysia. Malaysia remains the group largest market, dominating in terms of revenue, profit before interest tax, and non-current asset. This is followed by Australia as the second largest contributor, then China and other countries in Asia. It worth noting that while all regions contributed to the total revenue, only China recorded a slight profit before interest tax loss this year. Overall, the group reporting showed a very consistent performance across its global operation.
The first key benefit is about having a better evaluation of future cash flow. Total revenue can be misleading because it often hides the struggle of one department behind the success of another. If we look at the data, the UMW segment performed incredibly well with revenue jumping by RM 6,966 million. However, our largest division, the motor segment, saw a significant drop of RM 2,671 million. Without this breakdown, we might assume the whole company is growing naturally. Instead, we now see that future cash flow is heavily driven by the new UMW segment. This allows investors to stop guessing and make much more accurate financial predictions. Second benefit is strategic geographical risk assessment. Knowing where we make money is just as important as how much we make. It's about checking if we are too dependent on a single country. The data revealed a clear shift. The revenue in China dropped by RM 2,263 million, a risk that will be hidden in a standard report. Fortunately, this was more than offset by a massive RM 5,529 million growth in the Malaysian market. This proved the company isn't putting all its eggs in one basket. By diversifying across regions, the company remains stable even when one specific market faces a downturn.
So MFRS 134 is an interim financial report. It's an accounting standard that dictates the minimum content for an interim financial report and the principle for recognize and measure the transaction in a content financial statement for a period shorter than a full financial year, for example, a quarter or half year. So it is a core principle is to ensure that timely and reliable information is provided to the investors, which it helps to understand an entity's capacity to generate earnings and cash flows. The standard stipulates that interim report should focus on new activities, events and circumstances utilized annual report rather than duplicate the information that was already disclosed. For event 2, we declare a second interim dividend. So on 26 February 2025, the Board of Directors declared a single-tier second interim dividend of 4.0 cents per ordinary share for the financial year end 31st December 2024. The entire dividend is eligible for the reinvestment under the Dividend Reinvestment Scheme (DRS). So in the key financial details, so I can say that dividend for ordinary share is RM 4.0 cents. So we issue the price for our new shares under DRS RM 4.12 per new ordinary share. So up to 230,434,000 new ordinary shares may be issued. So we payment on 70 April 2025 the preferential dividend of 5.25% per annum on ICPS, approximately RM 12.8 million in cash. So this situation will impact our SOP lah. Master agreement with MRT Corp for Bukit Charger development. So, description of the event on 31st February 2025. Sunway Integrated Properties Berhad, a work-on subsidiary, entered into a master agreement with Mass Rapid Transit Corporations Berhad to develop a mixed-use transit-oriented development at the Bukit Charger RTS link station in Johor Bahru. So, in the key financial terms, the total development rights value RM 450 ringgit, 0.8 million, RM 19.60 million, 20% of the RV due upon execution of the master agreement balance payment to be made in accordance with the agreement terms impact on the financial position and performance. But in SOP, the RM 90 ringgit 60 million upfront payment will reduce the cash and cash equivalents while increase the investment properties or development costs on the SOP. In the financial performance, this development comprised the 4 residential towers, a retail mall and supporting infrastructure, has an estimated gross development value of RM 2.6 billion. So revenue and profit from this project will be recognized progressively upon completion, which is expected by 2036.
In this section, I will explain the interim financial reporting periods for Sunway Berhad. Interim financial reporting is prepared to provide timely financial information to users between annual reporting periods. Firstly, Sunway Berhad's financial year runs from 1 January to 31st December and it is divided into 4 quarters, with each quarter covering 3 months. Quarter 1 covers January to March, Quarter 2 covers April to June, Quarter 3 covers July to September, and Quarter 4 covers October to December. For this analysis, I have selected Quarter 2, which spans from 1 April to 13 June 2025. Based on the interim financial statement, the statement of profit or loss and other comprehensive income present both the current quarter and year-to-date performance. The current quarter covers 1 April to 13 June 2025, while the comparative quarter covers the same period in 2024. In addition, the cumulative year-to-date figures reflect performance from 1 January to 13 June for both years. In contrast, the statement of financial position is presented as at a specific date. The current position is at 13 June 2025, while the comparative figure is as at 31st December 2024, representing the end of the previous financial year. Meanwhile, both the statement of changes in equity and the statement of cash flow present cumulative information covering the period from 1 January to 13 June for both the current and comparative years. Unlike annual financial statement, interim report provide condensed information and do not include full disclosure as required under MFRS 134 interim financial reporting, which ensure minimum presentation and comparative information for consistency and comparability. Overall, although all statements relate to the same interim period, they are presented differently depending on their purpose. This enhances comparability and improves decision usefulness for users by providing updated financial information on a timely basis.